Hello and welcome to the Five Stones podcast. I am one of the triple-headed double play hosts. I don't know, is that a triple play? Should be better. My name is Raymond Modglin, and a lot of people know me as the Real Estate Monkey. And with me on my left would be, I think that would be you.
I'm Colin. I am the Great Dane is my nickname.
And I'm on the right. I'm Joe. I'm the real estate advocate.
My right or his right?
I'm always right.
I think it's their right. No, you should be on the left.
Not even close.
Technically, we're all on the right.
There we go.
Some are just
on the right, in the right.
Some are just more right than others.
Far right.
So today we want to talk about some updates that are going on in the real estate world. And I heard something today on NPR, believe it or not. And I couldn't believe how much this guy was talking about how the economy is so strong and that unemployment numbers were down and that consumer spending was up and that we were all in the clear. And I just couldn't believe what he was literally telling this host on NPR. And the NPR host let him get away with it.
Well, I mean, I think he is probably right that spending is up. I talked about this last week. Spending is up because everything costs more.
I don't know. It'd be hard to. I guess one of the things I learned in stats class is I can make numbers say anything I want.
Yep.
And that's the problem, I believe, when they start Colin, you and I had talked about this with the what was it where they're talking about the GDP, but they took out oil.
They take out energy and food and give you
and give you a new number and go, oh, look, we're up. Well, yeah, but you're not including the same things you included 5 years ago in that definition, or they changed the definition of a recession. 3 quarters.
It's no longer 2 quarters of negative growth. It's now 2 quarters of negative growth with other influencing factors like employment and others. So it's a very ambiguous thing now.
So they can take these numbers and make them say anything they want. And even though Joe is right about things costing more, I still don't believe that consumer spending's up.
The talking heads are all very optimistic about things. And they were just talking this week that they think the Fed is going to lower, the head of Wells Fargo thinks the Fed's going to lower rates 125 basis points. So that'd be 0.25%. So I think he's nuts. And so that's what our money guy said too. He's like, there's no way. The
guy on NPR today said there will be 3 decreases this year from the Fed. That's what his claim was.
They're very optimistic about that. It's if it happens, it's inflation. And there's 2 scenarios. One is that we have a soft landing and they start to ease. The other is we have terrible, terrible problem and they have to dramatically cut rates to stop people from losing their jobs and terrible things happening.
Yeah. Or third, they want to influence the election by lowering everything and making people think it's better before that happens. They'd never do a thing like that, I'm sure.
That's a damn good idea. I'm glad we're the first person to ever think of that.
Yeah.
So there's not much new in our world. The rates are still up and inventory is still kind of low, and it's tough for people to afford a house. But we're getting a little more activity. I think people are getting off of the bench and starting to take action because they realize rates really aren't going to get better in the next few months. So if they need a 4th bedroom or whatever, they're getting out there to buy them now. So.
Well, there's a lot of conversation. I've had several conversations over the past 4 or 5 days with agents that have called me, or a class that I had where we discussed the solution, and we're going to shift gears to this whole buyer's agency commission concept. And I think the real estate world has solved the problem by saying the financing people are now going to take the hit. Oh, we'll just throw it in the concessions, and Fannie Mae and Freddie Mac are going to have to change their rules about how much concession. And that's the answer. We'll just move on.
That sounds good and easy. And
That's kind of easy.
well, it sounds easy when you just discuss it like that.
Yeah.
And in the real estate world, I'm sure some people are aware. I know you guys are because we talk about it. There's limitations right now to what the government agencies will allow in a concession, and there's a specific list of items it can be used for. So that's 3% on conventional, 6% on FHA, but it's for things like closing cost points. It's very specific list.
What it reminds me of is Blazing Saddles. All of these realtors are sitting around. How do we protect our phony baloney jobs, gentlemen? Harumph. They all want to hold on to all of this commission, whether they're worth it or not.
Watch your
I'm
ass.
sorry.
I didn't get a harumph out of that guy.
Harumph.
Watch your ass.
How easy do you think it will be to get Fannie and Freddie to adjust their long-standing limits on concessions?
They're not going to change. The federal government doesn't do anything other than write themselves a check. They're not going to change any of that.
They got about as much chance as Mike Tyson winning a spelling bee.
Yes.
If they added the word realtor commission, you might see more FHA loans. They allow 6%. Problem is a big amount of our buyers, young, new buyers, need the concessions just to make the deal work because they don't have the down payment and the closing costs. So when you're squeezing all the blood out of a turnip, there isn't anything left. So a lot of transactions just aren't going to work. And probably culturally, that would not be a bad thing because like you and I discuss often, maybe they aren't really buyers right now, but that is going to exacerbate that.
The other problem that I have is when people are routinely saying, well, this is going to kill the housing market because buyers can't take this burden on. And in essence, what they're saying is, oh, well, we're just going to go ahead and let the sellers take all the burden, which is what's going on now. So I don't think it'll change the market because instead of the sellers paying it all, which they are currently doing, it's just going to be split between a buyer and a seller. So the same numbers are going to be there. Where it's going to kill it is exactly what Colin and I were talking about today. Those people that don't have an extra $1,000 in the bank to pay their agent. Well, are they buyers? I mean, let's get serious. I'd love to own a Ferrari. I went up and looked at one. I've got good credit, but it's like $30,000 down.
They're binos. They're buyer in name only.
I don't have it.
If they are buyers, many of them are barely buyers. I mean, they need all that help. They're getting gifts and all that. And to your point, when I'm selling a house and I have a bunch of equity and I'm selling it to someone that needs a first-time home, I am going to get a big check and I'm going to have a bunch of money. And it is easier for me to pay that, but I'm selling it to a generation of new home buyer that evidently doesn't,
what's going to happen?
My parents had to have 20%.
Yeah.
And then I only had to have 3%. And now maybe the next generation is somewhere in between those two.
Everybody, we got all these lawsuits going on right now. And what it's going to do is, they think that is going to keep home prices settled and keep them from inflating. It's just going to drive them up further because all of these sellers that are having to give concessions are just going to increase the price of their house to be able to give those concessions. And that's how they'll do it. And then the banks, where they're, as opposed to having to cover everything, they're going to feel more obligated to maybe give a little more value on that house because of everything that's going on. And that's what it's going to get tied back to that house. That's how they'll do it. But I mean, it's not going to fix part of the problems that they're trying to fix. It's going to.
There are some first-time home buyer programs that will make a little loan for the down payment. So they call them zero down type of things. And they make a little 3% loan for the borrower, but they have to have the room on the DTI and they have to have the credit and all that to get that loan.
Yeah. Just got a call back on a topic that we were talking about with a mutual friend who said that he has a 2:30 phone call with his attorney to discuss that very topic. which is a Senate bill that's been proposed by Craig Haggard, which is a friend of the club here. And we're going to try and get Craig on to talk about this real estate bill that he has proposed.
Yeah. So, well, I think the other thing, I don't want to get too far into that because I would really like him to clear some of the cloudiness in what it reads to us. But that would also affect some of these people that keep saying, hey, what I'm going to do is I'm just going to create a service contract for everything and have you pay over the course of a year or 2 years for my services as a realtor since you can't afford it all up front. Yeah. That'll throw that out the window. Won't be able to do that. So that's off the table.
Yep. So we are having a live event in May. I'm having a live event at Mallow Run Winery for anybody in this area that probably needs to come to that. And one of the topics that we are discussing is the new normal and what is going on in 2024 and beyond. And of course, we're going to go in depth over the potential lawsuit and all of that. And there's some things I found out over the weekend. I spent a lot of time studying that no one has talked about. There is a rule that says for and I keep losing the dang word, where they're contesting the answer.
The appeal?
Yes, thank you. I don't know. For an appeal to be filed in a federal court, that they must post a bond of anywhere from 0.3% to 40% of the fine. That means NAR has got a $51 million to up to $680 million bond they have to file. So I've got two questions. Is that why Keller Williams settled out earlier this month on $70 million? Because A, they didn't want to pay part of that bond, and two is I think they know the writing on the wall. And if NAR has $51 million in the bank, I think they're charging me too much.
They're most definitely charging us too much. But
so and nobody has talked about this other than them saying, oh, we're going to appeal. How are they going to appeal? I mean, the case law says they got to post a bond. There are companies out there. Google appeal bonds. If you want to get educated, Google just 2 words, appeal bond, and read about it and understand that to file that appeal, they're going to have to post a bond. California, of course it's California, is 150% of the fine as the bond. Talk about keeping people really sure I'm going to win the appeal if I've got to post 1.5 times what my penalty is,
That is very discouraging for the appeal process.
Well, the whole point, according to most articles you read, the whole point is to block people from filing appeal after appeal after appeal just so they don't have to pay the fine. Yeah, if they won't let them keep kicking the can down the street, so to speak. That's the whole point behind it. I agree with this. I agree. That's a good idea.
Yeah. I mean, I think without it, they can kick
it's going to work.
The road. They could kick it for like 10 years and save up all of the money and then go back and pay it.
Yeah. So that's what this appeal bond does. And nobody's talking about that. Maybe we can be the first to do that.
Everybody just wants to protect their own crap and doesn't, I'm just telling you, you can say whatever you want to say. When you're wrong, you're wrong.
Well, wasn't it Carlin that said my stuff's stuff and your stuff's shit?
Yeah.
I protect my own stuff.
Everyone's house is the best one on the block, man. Yeah. My house is the best.
Mine is. It's the only one on the block. So by default, that also makes it the worst house on the block, I would think.
That's true.
It is both.
So, little interlude. Joe, I'm now at the Cigar Club, and you're not here.
No, I am sitting at the Trester family compound in Central Florida, enjoying a final day in 73-degree weather.
Yeah.
Before turning the truck around and driving back home.
Well, unfortunately, because of that, you don't get to enjoy your new worlds like Colin and I today are enjoying. And Colin, where are you?
I am in the soundproof studio at the Five Stones Mortgage Compound, where we are allowed to smoke. I'm smoking what is this? An LFD, La Flor Dominican again.
Go ahead, Joe. Light one up. Let's see what
I'm
happens.
not going to light it up, but I will be trying
Let's
this.
see something strike you in the head.
Yeah, go ahead. Light it up. Come on, sissy. Do it. Do it. Show them who's
we're good.
Show them who's boss.
Oh, we know better than that.
You see a ashtray or a tennis shoe, punk.
So should we start? Should we tease that we're going to talk about this Indiana lawsuit soon and get Craig on, because it's interesting? It sounds like maybe it's an attack, not an attack. It's has to do with wholesaling and a couple things kind of close to the industry a little bit.
I believe, and I, like Joe, don't want to give too much away because I want Craig to speak for himself. I believe that's what is pointed towards. If I'm reading his legal speak correctly, it is pointed towards that whole industry of wholesaling and assigning contracts. And the date on that law is March 14th, which is just 2 weeks away. So this has got to being pushed through very quickly. So I'd like to get him on before the 14th. And we've got feelers out with some of our connectors and all that to see what time he would have available for us. So
the beauty of it is obviously we can do it just like this. So all it really would take is about 10 minutes. So
the other thing you guys have probably heard is the NAR lawsuit that is now creeping into Indiana.
yes.
I don't have a copy of the flyer, but there are now postcards being mailed out to the prospective people about filing the class action lawsuit. That pin in Massachusetts, get this, Joe, was a $3 million settlement. Of the $3 million, $900,000 was given to the attorneys, or would be. $1.2 million was for extraneous legal costs. Attorney. $250,000 went to the admin to do all of this, and each recipient of the class action, $2,500. So, we have joked, and we always joke, who's making the money here? Follow the money. Where's it coming from? Who started this? Well, I think we see when you're talking about almost 2 million of the 3 million is going to end up in some legal coffer, and $2,500. So let's think about this. The average house let's just use Indiana, is $300,000 for easy math. They say that's 3%. That's $9,000, and they're getting back 25. So in this whole process, they are still not going to be made whole or even close to being whole, but the money is going to the attorneys.
They would have been whole if they got a third of the whole nut, but they got a third of a third.
Yeah.
The lawyers got 2/3. I thought lawyers used to get 1/3. Now they're getting 2/3. So
that's what it said. This was broken out as $900,000 to pay to the attorneys, but another 1.1 or 1.2 was for other legal fees.
Well, yeah, they all had to have new cars to drive around to do this. So they got to pay those off, and they got to pay for the paper that they printed and the card stock and the mailing and all of that. So,
I think it is actually hiring partners to do research and other, all kinds of other.
So there is
costs in there.
Trying to remember the website. They have a website called realestateclassaction.com. Don't go to that because I'm not going to say that that's 100% what it was. I'll find that and we'll get it back out. But they've actually put together a website that people can go to and fill in the dates and all of this kind of stuff. Other funny news is Redfin got sued this week as well. Yeah. Redfin, as you know, kind of saw the writings on the wall back in October and November and actually removed and surrendered their seat on the board of the NAR and advised all of their people that they probably should follow. Well, unfortunately, there was one family, and now there's two, which is enough to start a class action in Southern California that is filing against Redfin when they were a member. So now they're actually naming Redfin, who thought they were going to get out, is actually now getting out.
Didn't the Department of Justice also intervene on one and say they want to look at this stuff, which that was another thing we discussed, that they'll probably intervene and come up with some professional standards, but they stepped in on one of those. I don't recall which one.
So I have just been handed, here is the file, or here is the postcard. Did you receive this or one of your clients? Oh, yeah. Notice of proposed settlement, commission antitrust settlement. Today, did you see the word predatory real estate practice? That's the
they used my predatory term.
Yeah.
It's no longer just us lenders now. You guys are in on it.
I like it says a federal court authorized this notice. It is not from a lawyer. You are not being sued. But if you sold a home and paid a commission to a real estate agent, you may be part of a class action suit. These are what are now being mailed out here in Indiana. So we called this 4 months ago that we weren't involved, but it's coming. So the big question for everybody to ask is, how far does that trickle down? And I don't know this answer. You know, is Keller one? Well, they signed out. They signed off. Are they going to go after Raymond Modulin and say, hey, we want our $16,000 back? Or are they just going to stop at trying to sue Keller Williams and the big companies and get all their money from them?
Well, here's the other one. Winter Realtor is going to start suing their parent companies because of the exposure. Well, you forced us to do this. The NAR forced us to do this. Now we're going to sue you.
You should do that, Joe.
Well, we ought to.
No, you shouldn't. There'd only be two hosts on this show.
And when I worked at Chase Bank, they had an employee class action type of suit for managers being abused to work more than 40 hours a week because they were salaried, you know?
Yeah.
And they were trying to get everybody on board, and everybody's like, oh, yeah, let's do it. And a number of my colleagues got in on that. And within 6 months, even though they all got a few $1,000s, kind of like what you mentioned, they all got a little bit of a payday. Within about 6 months of the end of that, they were all looking for jobs. Coincidentally. I'm sure that's just a coincidence.
Oh, of course.
Well, Joe wouldn't be
suing your employer.
Joe wouldn't be looking for a job. They'd be looking for Joe's body.
Yeah. Well, and in this case, it wouldn't be on that level.
Yeah.
I see that coming from, and I don't want to mention any of the larger brokerages because A, I don't want to give them notoriety, and B, I just don't want to. But we all know several of them giving stock options if you're there, and this and that, and promising all of these things. You're going to get a whole lot of options and nothing because they're all going to go tits up.
How can you say it without saying it?
Yeah.
He promised EXP he wouldn't say anything.
Exactly.
So, well, gentlemen, we are at our time. Let's do a final closing. I want to thank you guys. Joe, have a safe drive back.
Will do.
To the northern world. Colin, catch your flight and donkey, whatever you need to get back to here. So, any last comments, Joe?
No, just keep your head on a swivel all the way around. Times are a-changing, and you better be prepared for it.
Yep. Colin, how about you?
I got nothing to say, but have a great weekend. Five Stones Mortgage is still in operation and waiting for you to call.
I'd like to say, don't forget to check click the subscribe button and the little bell so you get notified. And once again, I put this out there. If you'd like to be a guest on the show, please put it in the comment. We'll have our producer reach out to you and come on and you can talk with us. And if you disagree with us, we still would like to have you come on and talk.
I don't want to rain on your parade, but we did get one comment today that I did summarily dismiss because the best they could come up with off of the videos was to say that we are all obese, so we should not be listened to. Like, well,
apparently people don't have an opinion, and I would take offense to that, Colin.
Oh, I take it. They are miscategorizing my size. I identify as svelte. So to say that I'm obese, I mean that's just my pronoun is skinny.
That's hurtful.
I just don't appreciate it.
Yep. So, all right. Thank you very much, gentlemen. We'll talk again. Have a good day.
Harumph.